Hello financial crime fighters. Under the UAE AML regulations, the regulated entities must identify the suspicions related to money laundering or terrorism financing, and report the same to the Financial Intelligence Unit by filing a suspicious activity report or suspicious transaction report. To determine which report is to be filed on the goAML portal, whether SAR or STR, it is essential to understand the distinction between the same. In this video, we shall discuss the instances where the regulated entity is recommended to file a suspicious activity report. SAR or Suspicious Activity Report is a type of report to be filed by financial institutions, DNFBPs or VASPs, when they have reasonable grounds to believe any activity or behavior of the customer suggests involvement of proceeds of crime, or attempted to launder the money, or intended to finance the terrorist activities. Let's discuss some typical instances that may be considered suspicious enough to warrant the filing of a SAR. The first example would be a case where the prospective customer is refusing to provide identification details required to conclude the Know Your Customer process. If the potential client refuses to identify himself and hesitates to provide necessary documents while establishing a business relationship, it is a red flag. An extension to this could be a scenario where the transaction is proposed to be conducted on behalf of any undisclosed principal. Filing of SAR must be explored where the customer proposes to conclude a transaction on behalf of a third party without identifying such party, who is the beneficial owner in the proposed business relation. When there is an unusual series of complex transactions involving multiple accounts, banks, and intermediaries, this is a suspicious activity and must be investigated to determine the necessity to file a SAR. Moreover, when the proposed customer is closely associated with a sanctioned person, this may indicate a higher risk of business being exploited for terrorism financing, and be construed as suspicious activity. Another red flag could be the sudden cancellation of the proposed transaction. The customer may deter himself from the business relationship after getting any kind of hint that might indicate potential revelation of his being connected to criminal activities. When the customer insists on executing the transaction without having proper and required permissions or documents from the authorities, it also raises some suspicions. While onboarding the customer, if the customer makes an unreasonable request to the onboarding team to maintain secrecy about the proposed transaction or the customer's identity, it is a red flag, requiring the frontline employees to raise an internal SAR. Another instance that may be considered for filing SAR could be a proposed business relationship with no economic rationale. This may be related to the volume of transactions contradicting the person's financial capacity or the entity's usual business activities. As the discussed illustrations suggest, SAR filing is triggered for proposed transactions or the proposed business relationship where the transaction indicates attempt to launder the money or fund the terrorist activities. Hope this video helps in understanding the distinction between the instances where SAR is to be reported with FIU. Stay tuned for more thoughtful AML discussions. Don't forget to like, share and subscribe to our channel, and hit the bell icon so you never miss a video.